Imagine waking up on an ordinary Monday morning. You pour your coffee, scroll through your phone, and bam! Headlines everywhere screaming market crash. Stock tickers bleeding red, and financial analysts comparing it to Black Monday. It felt like the sky was falling, especially if you had money tied to the stock market. The trigger? An announcement that blindsided global markets. Former President Donald Trump, making headlines yet again, unleashed a fresh round of tariffs. And not the small, technical kind. This was the sort of move that sent shockwaves through the world economy. Almost instantly, investors across the globe started dumping stocks, fearing the worst. Some even whispered, could this be Black Monday 2.0? In a matter of hours, billions of dollars in market value evaporated. People who thought they were comfortably invested in safe stocks watched their portfolios lose zeros, not over months or weeks, but literally overnight. And it wasn't just the average investor feeling the sting. Even billionaires weren't spared. Elon Musk, the man often seen as untouchable, lost an eye-watering $4.4 billion in just a single day. By the time the dust began to settle, Musk's total net worth had dropped over $134 billion for the year, and that was largely thanks to Tesla's stock nosediving like a roller coaster with the brakes cut. But while the world was caught in panic, headlines missed something fascinating. In the quiet, behind the scenes, one man wasn't panicking at all. In fact, he was doing what he does best, staying calm, calculated, and already 2 steps ahead of everyone else. That man, Warren Buffett. And the story of how he played this market like a grandmaster chess match is not just impressive, it's a masterclass in money management. While the world was busy watching their portfolios crumble, Warren Buffett wasn't pacing around, biting his nails, or calling emergency meetings. Nope. He was quietly pulling off one of the boldest, most calculated moves of his legendary career. See, Buffett isn't the kind of investor who makes headlines with flashy, last-minute decisions. His strategy is usually slow, patient, and deeply thought out. But in 2024, something unusual happened. For a man famous for holding onto stocks for decades, Buffett started selling. And not just a little trimming around the edges. He sold a jaw-dropping $133 billion worth of stocks in just the first 9 months of the year. To put that into perspective, this wasn't some let's tidy up the portfolio move. This was the kind of decision that makes you sit up and wonder, what does Warren know that the rest of us don't? But the story doesn't stop there. While most investors would turn around and reinvest that cash into new opportunities, Buffett did something even more surprising. He barely bought anything. In fact, Berkshire Hathaway, his company, bought less than $6 billion worth of stocks in that same stretch of time. And that's when the real light bulb moment happens. Buffett wasn't playing offense, he was playing defense. Big time. By cutting back his stock holdings and halting buybacks, he pulled his company's cash reserves up to record highs. Berkshire's cash pile doubled, from $168 billion to an eye-popping $325 billion in just 9 months. Now here's where the story gets really interesting. Instead of chasing the next hot stock or throwing that cash into risky bets, Buffett did something simple but genius. He parked the majority of it in short-term U.S. Treasury bills. Safe, stable, and immune to the roller coaster ride the stock market was stuck on. While everyone else was scrambling, Buffett was building a fortress. And this isn't just about playing it safe. This was about preparing for the real opportunity. Because Warren Buffett knows something most people forget. The biggest profits don't come from riding the market's highs. They come from having cash on hand when everyone else is forced to sell. Now, on the surface, Buffett's decision might sound boring. Selling stocks, stockpiling cash, parking it in treasury bills, it's not exactly the kind of stuff that makes headlines like tech IPOs or crypto moonshots. But here's the twist. That boring move was actually a masterstroke. See, Buffett's strategy wasn't about running from the market. It was about outlasting it. While other billionaires were bleeding billions, Buffett wasn't losing sleep over stock charts. Why? Because when you've got a cash reserve the size of Berkshire Hathaway's, $325 billion and counting, you've got options. And in the investment world, having options is power. And this isn't the first time Buffett's played this exact hand. Let's rewind the clock to 2008. The world was in the middle of a financial meltdown, banks were collapsing, the stock market was in free fall, and fear was everywhere. While others were panicking, Buffett was writing checks. Big ones. $5 billion into Goldman Sachs, $3 billion into General Electric, $5 billion more into Bank of America. Those weren't charity donations. Those were investments made when the market was on fire. And when the smoke finally cleared, Buffett walked away with over $10 billion in profit from those crisis-era bets. Not in decades, and in just 5 years. Fast forward to today, and it looks like history's lining up to repeat itself. Buffett isn't hoarding cash because he's scared of the market. He's doing it because he knows the best deals show up when the world is scared. And while everyone else is forced to sell at bargain prices, Warren will be ready, checkbook in hand. That's the difference between surviving a market crash and winning one. At this point, you might be wondering, how does Warren Buffett manage to stay so calm when everyone else is losing their minds? It all comes down to philosophy. Buffett doesn't treat investing like a sprint. He's not chasing quick wins or gambling on trends. His entire approach is built on a simple, almost old-school belief. Patience, discipline, and preparation beat panic every single time. One of his most famous lines goes like this: "Be fearful when others are greedy, and greedy when others are fearful." And if you think about it, that's exactly what he did in 2024. When the markets were riding high, Buffett wasn't buying the hype. He was quietly trimming his portfolio, stacking cash, and resisting the temptation to chase returns. And when the panic set in, Buffett wasn't the one scrambling for the exits. He was already comfortably seated, cash in hand, waiting for the perfect pitch. But here's the part most people overlook. Buffett doesn't see cash as dead weight. He sees it as potential, as dry powder, as the ultimate form of financial patience. Because when you've got cash, you're not a victim of the market's ups and downs. You're in control. You're the one who gets to decide when to strike. You can wait for once-in-a-decade opportunities while others are forced to sell at a loss just to survive. And that's what separates Warren Buffett from most investors. Not the size of his bank account, but his ability to think long-term, stay emotionally steady, and avoid what he calls the noise of the market. Whether it was 2008, 2020, or 2024, the strategy never changed. The man simply knows when to hold, when to fold, and most importantly, when to wait. Now, you might be thinking, sure, Warren Buffett can make billion-dollar moves because, well, he's Warren Buffett. But here's the thing, the core of his strategy isn't reserved for billionaires. It's actually something anyone can learn from. The first lesson? Cash is not the enemy. Most of us are trained to think that cash sitting in a savings account or low-yield investments is wasted potential. But Buffett flips that mindset on its head. Cash is freedom. It gives you room to breathe when the market turns upside down. It gives you the power to say no when deals don't make sense. And the power to say yes when real opportunities show up. The second lesson? Don't follow the herd. When the news is full of market hype, the kind of "this stock can't possibly go down" headlines, that's usually when Buffett starts getting cautious. And when the panic sets in and everyone's rushing for the exits, that's when he starts sharpening his pencil. The third and maybe most important lesson? Think in decades, not days. Most people treat the stock market like a casino, but Buffett treats it like buying into real businesses. He doesn't care about this week's headlines or next quarter's earnings report. He cares about long-term value, solid fundamentals, and waiting for the right moment, even if that moment takes years. And the best part? This mindset isn't about having millions to invest. It's about having patience, self-control, and a plan. So the next time the market starts to shake and the headlines start flashing red, think about Buffett sitting quietly with his billions in cash, waiting for the storm to pass. Because whether you're managing $1,000 or $1 billion, the principle is the same. It's not about timing the market. It's about being ready for it. So while 2024 became a year most investors would rather forget, full of sudden crashes, tariff shocks, and wild sell-offs, Warren Buffett once again proved why they call him the Oracle of Omaha. He didn't outsmart the market by making some lucky prediction. He didn't jump ship at the last second. He stuck to the same playbook he's used for decades. Stay patient, stay liquid, and above all, stay calm when the world isn't. Because in investing, Just like in life, it's not always the person who moves the fastest who wins. It's the person who's prepared when the moment comes. Now, the real question is, when the next storm hits, will you be scrambling or will you be ready? If you're as fascinated by Buffett's strategy as we are, let us know in the comments below. What's your take on his cash-heavy, slow, and steady approach? Would you do the same, or do you play the market differently? And hey, if you enjoyed this deep dive, don't forget to hit that like button, subscribe, and ring that little bell so you never miss a story about the world's sharpest investors and the lessons you can learn from them. Thanks for watching. And until next time, stay curious, stay